Here's today's Money Metals Minute, brought to you by MoneyMetals.com. Precious metals surged Tuesday to open the holiday shortened week, but they gave some gains back Wednesday and Thursday. Investors must contend with uncertainty surrounding the economy, the upcoming election, and the timing of the direction of the Fed Reserve's next policy move. The Fed meets September 20th and 21st. Lately, officials are pushing the narrative of moderate economic growth and a tightening jobs market. Now, here's a special report from Mike Gleason of Money Metals Exchange.
It is my privilege now to be joined by our good friend David Morgan of the Morgan Report. We've got the election season kicking into high gear. We'll have the debates here pretty soon. We're about 2 months away now from Election Day. What do you think a Trump victory would mean this November for the markets, primarily, I guess, the metals, since that's what we're focusing on here? And then also, what do you think a Hillary victory would mean?
Well, my view is different than a lot of people, but you want my view. My view is it doesn't matter. My view is it's changing captains on the Titanic. My view is that Trump seems to resonate with a lot of conservative thinkers, and I think there's many, many Americans that are just absolutely, totally, and completely disgusted with the political class. I do think that you can make arguments either way. Who gets in could move the price, and we might get a blip one way or the other depending on who's elected, or should I say, selected. But regardless, I think in a longer-term macro picture, it really means very, very little. I think we're way too far gone on the debt paradigm overall that any one person, no matter how well-meaning they are, can really turn the boat, turn the ship. The Titanic has hit the iceberg. It's taking on water, and you might get somebody stronger at the wheel, and you might veer off, but it doesn't really matter. The ship's going down. That's my view.
If you look at the silver spot price, it's up more than 35% since the first of the year. But if you look at the mining sector, gosh, David, I mean, we've got the Huey Gold Stock Index up nearly 100% for the year, and the GDX is up over 120% year to date, even with the big pullback in the last few weeks. So things are finally starting to look up after a rough, very few years for everyone in the sector, with many stocks down 80% or more since the 2011 peak, assuming they even stayed in business. But talk about the miners. What are you looking for here in the second half of the year after a great first half?
I'm actually looking for further gains by the end of the year. I think we've still got more work to do to the downside. And as I said earlier in your show, Mike, I think probably another month. I think by the time that the SDR takes place and people, the markets, I should say, understand how much dollar damage is done or not. We'll have to wait and see, with the yuan being more accepted not only by the SDR but in final settlement rather than having it go to the dollar directly. As that settles out, I think you'll see more and more consolidation into the precious metals and more push for them to go to the upside. So it's a situation that most of the large funds, money managers, pensions even, that missed the 2008 bottom in the precious metals during the currency crisis have woken up early this time and have moved into the paper paradigm of the gold and silver markets, which means that the open interest, as said earlier on your show, is very, very high relative to what it's been historically, and these are strong hands. On top of that, the Shanghai Gold Exchange has very, very large open interest themselves, and they're trading from the long side vis-a-vis the commercials or the banking system that trades historically from the short side on the COMEX. So you've got big money that got in relatively early in both gold and silver because they understand that the stock market's too high and they want to be hedged. They have no real philosophical reason to own gold like we just outlined in the last question, but they manage money and they need exposure. And the best way for them to get exposure is to buy it on a leverage basis on the paper markets. And so that's what's taken place with the addition of the Shanghai Gold Exchange ramping up the amount they've purchased on paper. And of course, that's much more physical market than the COMEX is. So again, there's that really strong bull-bear back and forth. And so just to close out, I really don't see these metals coming down a whole lot more for a whole lot longer. And I think this year is going to be one that people look back on and say, geez, I'm sure glad I bought my metal or bought my mining shares during 2016.
Yeah, that was David Morgan of the MorganReport.com and Mike Gleason at MoneyMetals.com. Live prices at MoneyMetals.com show gold currently trading at $1,334.35 per ounce, silver at $19.46.